Hello, traders. It is Wednesday, September 24th, 2014. It's 8 o'clock Central. Trading futures, derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Quick rundown of the news. Overnight, ECB's Draghi on Europe One Radio says the euro is irreversible. We'll do whatever it takes within mandate to watch over it. Accommodative monetary policy to remain for a long period. Rates will stay at current levels, cannot go much lower. Reiterates ready to use all tools at disposal, does not see risk of deflation. Main danger in Europe is unemployment. Germany's IFO business sentiment misses. It comes in at 104.7 versus 105.8. This is an important release. Fed's Kosher Lakota, a voting dove, says he sees inflation below 2% for the next 4 years. So that conflicts with the idea that the Fed's going to raise rates the first quarter of next year. Japanese PM Abe indicates he is concerned that further sharp JPY weakness could harm the domestic economy. NATO says that Russia has withdrawn a large number of troops from eastern Ukraine, although some still remain. And the U.S. airstrikes in Syria targeted an al-Qaeda cell called Khorasan, as well as the Islamic State. The cell was nearing the execution phase in a planned attack in Europe or the U.S. The U.S. Department of Homeland Security warned police that Syrian al-Qaeda operatives may be near to an attack in the U.S. or Europe. I don't know if this is more fear-mongering or if it's a real threat. Not sure. Don't trust governments. So that's what's on. That's what was on the headlines this night session, this overnight session. Looking ahead at what the market's got for us, the day's got for us. At 9 a.m. Central, just a half hour after the open, we get new home sales for August, 430,000. At 9 o'clock, at the same time, Obama addresses the United Nations Security Council on terrorists. At 9:30, we have the Department of Energy's crude oil inventories at 750K, distillates at 350K, and gasoline at negative 300K. At 10:30, we have a 2-year FRN reopen for $13 billion. At 11:05, we have Fed's Mester on monetary policy, and at noon we have Fed's Evans at Labor Market Conference. At noon also we have a new 5-year auction for $35 billion. That's what's on deck. There's a fair amount of driving news there. Let's take a look at our charts. So let's go over real quick what we did yesterday. I'll go back, those of you who were at the Trader Bite yesterday, I know some could not get on for some technical reason or whatever, but if you go and review yesterday's Trader Bite, you would see that the primary trade idea was that we would find responsive buying back to, so as we come in to yesterday, we were looking for a gap open, and then the primary trade idea was responsive buying back to 82.50, 83.25, a battle there, and then a continuation to 86.75, 86.75, and then the key price to test is 87.50, which is the microcomposite point of control. And in that video from yesterday morning at 8 o'clock, you'll see that I said that the expectation is for it to push through by a little bit, and then I expect the sellers to step in, take it out of range, and then start to tackle the price below. And I list several key areas below, namely 76.50, 72, 76.50 and 72 below. 76.50 was the double bottom right back here. I also tweeted out an image of this right back here, the double bottom before buyers stepped in the day before the Fed day. I expected a battle at 83 and a quarter once it gets up there, and for a long time, if you look at how the point of control moved, this pink line, you'll see that it ended up settling here for a long time at exactly 83.25. The market just battled this price quite a bit before the point of control finally moved down right here on the touch of 82.25 down to 82.25 and ended up settling there. Yesterday's plan, the primary trade idea for the day, worked out completely perfectly, almost too perfect. It's kind of scary, but yesterday we also did not have any intervention, interference, talks, conversations, speakers, and so on, and we don't see that often. So somebody wrote to me, I received several emails about this yesterday saying, well, how is it that I'm able to call it like this? And I'm gonna be very upfront with you, and I'm gonna say that there is no secret here. There's nothing for me to sell you to help you do this the same way. All I'm doing in these videos, all I'm doing every day when I come in to look at the market is basically read the story. That's it. There's no secret sauce. There's no magic crystal ball or anything like that. I'm just reading the story, and sometimes the levels play out perfectly. A lot of times it runs over areas, but the plan still stays in place. And then other times the plan gets completely rejected, which is even better information. It's higher quality information when I think, as I did for Monday, when I think that we would get responsive buying Monday back to the 2003. That was a key area on Monday. And then the market ends up failing to push higher and selling off all day. That is great information. The fact that we didn't find any responsive buyers on Monday and it just sold off is a beautiful thing. The euro's dropping very quickly. The dollar's making new highs on the session. For some reason, it sounds like something has just come through. Not hearing anything on my news feed. So I just want to remind you that, again, it's not about having some magic indicator that happened to be right this one time. It's just a story. I'm just trading the story. I'm forming the bias based on my story, and then I'm taking the trades based on risk reward and statistics, really the probability of getting a scale out versus the probability of getting stopped out. So that's basically how yesterday played out. It did play out beautifully, and it ended up finishing the day with by hitting the target at 72, which was key, by 2 ticks. So my upper target at 87.50 was lifted by 2 ticks, and the lower target at 72 was hit by 2 ticks. Sellers on the close. Notice the last couple of sessions, sellers on the close, sellers on the close, sellers on the close. And that's, after we put in that high, that's what we have. It's kind of it's very systematic on the close. You got to pay attention which way delta is moving at the close of the day. As far as what's done since then, we need to look at the overnight session. The overnight session saw some pretty decent responsive buying. It initially opened right when it closed, where it closed, no gap, and it tested 68 and a quarter, and then it has not seen that level since. I see a poor low at 68 and a quarter, but the market has basically drifted up all night and is pushed back basically to yesterday's OS low, opening swing low, and is sitting up here. We have a P-shaped profile. I'm not impressed with the low. I don't feel like this is a very, very strong low, but basically the market is the inventory, the overnight inventory is fairly even right now. So it's hard to tell which way this is likely to go, but the shape of this profile, given that it's a P shape here with a lot of the volume concentrated up here. As long as this market holds 73 even on the open, I think we're likely to see more responsive buying today before anything happens. So that brings us to the idea of what the main trade plan for the day is, and the expectation for today. We're opening in range. We do have the close below us at 72.50. We're opening in range. I expect that we would probably have a continuation of selling, a small continuation of selling, but I expect it to hold steady ahead of 73, and then I expect it to turn up, get back into value. This value range is valid. Get back into value. Struggle here at 77 a quarter, 77.50. But as soon as it takes that over, then the targets become 82 and a quarter, 83 and a quarter again, and then the other side of value probably 85. That puts us about 10 points away on an up day. That's the extent. That's as much as I believe it'll have today. There's a fair amount on the calendar today, so fair amount of activity on the calendar. So it may that may change, but overall, I think today is likely to be a rest day. We've had 3 selling days in a row. 3 selling days in a row with a lot of structure above that has not been properly auctioned, namely everything that is above this 88.5 has not been properly tested, all the way up to the 96.5 MC value area high, and to 2003. I think we need to clear this 2003. If sellers are really going to be active, I believe the level to be active around is 2003. And it's still safe for sellers to step in at that point and hold prices down, even though the high is at 212.75. So if I were looking to be a seller long term, if I were a long term player, 2003 would be the area I'd watch very closely. So I expect this to float up. It's battling with the overnight point of control. I expect this to test a little bit lower, and then I expect it to float up as a main trade idea today. If it does not do that, that's great. If it doesn't do that, that's great as well. It just shows me who's in control. If it doesn't do that, it's likely to try to push higher into 77, fail, roll over, and then start to attack 1968 and a quarter. And remember, there's a gap zone below us here. We're getting awful close to the MC low at 65.25. Let me extend this MC. The MC low at 65.25, and beneath there we have the small gap coming back from the 19th of August that comes into play. So let's go back to that day, because that'll be the template day. So that's where I started the MC here on the 19th of August, and we have a small gap beneath us, and then a P-shaped day with a point of control at 1960. So I'm looking at 1962.75 to 1961 as a key area to test and close below. Even below that, so below 56, 57, there's very little to contain the sellers from taking it all the way down to 45, 46 once that's done. So we'll see what this market has in it. Today is an important day in that the market's been selling for 3 days. 4 days in a row is a lower probability, so I'm thinking responsive buying. But if we do not find responsive buyers on the open, then the fact that it falls through is actually good for day traders. Not great for investors, as value is being eroded from their investment, but it's great for traders because it brings in a little more volatility and gives us a little more opportunity for gain and loss. Look at the VIX. This is a daily VIX chart. The VIX has been compressing for quite a bit. It's been compressing a long time. This is what it looks like since November of 2010, and we've been in this awful compression here. And if you look at the last few days, we've had some pretty good increase in the VIX. The VIX is up about 20%. So there's a little more volatility. Premiums are picking up, and there's a little more action for everybody. Again, in the short term. So I'll leave you with those two plans. The primary plan is responsive back up to towards the 8250 area, 83.25, with a target of 88. If we don't find responsive buyers, then the target below will be 62.75 down to 61 even. And if that doesn't hold, which it's not likely to if it gets down there, then 59.25 all the way down to 55, which puts us about 20 points away. Yesterday's range brought in 16.5 points. The prior day, 16.75 points. So right stacked on top of each other. Before that, 14.5 points on the day session only. I hope that makes sense. One of the things I wanted to touch on real quick, it's just an important theme, and it's something that I handled all the time with prop traders. Just remember that we are not logical beings having emotional experiences. We are emotional beings needing to be logical in our trading, and that's the main battle that is facing traders, in my opinion. We generally make a logical, common sense plan even when we're buying a house or a car or a phone. Which Android phone should I get, or which iPhone should I get? Should I get the 6, the 5, 6 Plus, whatever? Generally, even though we have a logical reason for what we want, we actually act on emotions generally. So your job as a trader is to constantly be aware of your emotional state. It sounds like a touchy-feely, fluffy, psychobabble stuff, but I'm going to tell you that execution is where the rubber meets the road for traders, and it's very, very, very important for you to be aware of where you are when it comes to how you feel about the way you're trading, how you feel about the market, your relationship with the market. So if you're coming into the market with a sense that it is overpriced, it is illogical, it has gone too far, it's a terrible trade, all that stuff, just know this, that this is completely narrowing your what normally could be a panoramic view of all the information that you have. It is narrowing the angle of view on what you see, and you can only see those things that will either negate, if you're negative, that negate what you want, or that confirm what you already believe the market is. So it's really important to come in here with a plan that is based on logic, that is based on market behavior, that is based on probability and statistics as much as possible to a limit, and then to know that when it's time to execute, there's an emotional component that comes in and does a very, very good job of getting in the way of executing that plan. So you need to plan for the emotions as well as the plan to trade. This is an important point that I think most people miss. I don't see much on it online, but be sure to understand yourself first and foremost when it comes to execution. Don't get caught up in the action just because the market's dropping and it's moving quickly or whatever. It doesn't mean that you should have been a part of it. You are not a part of it. Confront the issues as they come. Be realistic. Be in the moment. Breathe. Learn or remember to just breathe through the execution process. Okay? Good luck to you. Watch your risk and have a great day.